What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, you got to bear with me. You got to bear with me. It's been pretty well documented that your boy's been having a few problems with Comcast, namely my upstream has been limited. So what that has done is caused me some frustration, I guess, going back and forth with the powers that be at Comcast. My last discussion with them was yesterday. Pretty interesting. Thursday, a guy comes, checks out everything, and says, oh, it's a problem outside. I got to do a maintenance ticket. So they go ahead and put in the maintenance ticket. He said it's going to take 24 to 72 hours. I said, okay, so fancy way of saying 1 to 3 days. So then yesterday, which is, so you got, let's just say Friday, Saturday, Sunday, Monday, Tuesday, so 5 days later, I call. Actually, before that even, it was funny because they called me first, asked me, based on my survey results, if everything was okay. And I was like, what do you mean? You're like, well, your survey said, your problem's not fixed. I said, yeah, well, it's still not fixed. She's like, oh, well, what is it? So I explained it to her, and she's like, oh, well, I can't help you. You'll have to call the Comcast number. I'm like, aren't you Comcast? Didn't you just call me? Well, I'm in the different department. I was calling about this versus that. I'm like, okay, great. Thanks for absolutely nothing. Enjoy the rest of your day. So then I called Comcast again, and lady was very helpful and said that, again, they use some third party to do this maintenance, blah, blah, blah. How any of this is my problem, I don't care, right? So anyway, that's where we're at. So there's still a problem. So I apologize. We are going to have buffering today. It's going to happen. I know it's frustrating, but, from what you guys said in the chat room, it's my understanding that you would rather have a buffered, broken stream than no stream at all. So that's what we're doing, guys. So again, I apologize if there's buffering, if it's all sorts of madness here today. It is what it is. Okay, so we got it done. So here we are talking about Lulemon. So let's kick things off as we always do, taking a look at the price consensus and EPS surprise chart on Lulemon. Good. I'm glad it's working so far. Kurt, Trevor, Mr. Wallace, the usual suspects. How you guys doing? So you know the drill. The black line course rejected. And then this shelf starts to get put in, but then there's all this, right? Nobody likes it when you overpromise and underdeliver. And that's what you can see here. Whenever you see these lines start higher and then come down, that's what I like to call the overpromise and the underdeliver. Should come as no surprise that it's made for some very choppy action in the stock. So you have a little bit of a trend here. Then you get a rocket up, chop down. Just a lot of choppiness. A lot of choppiness. But there is a common theme here. And I think it's just under this $70 level. You've got seven. We're going to look at this on the chart, obviously the technical chart. But how often has the $70 level been resistance for the stock over the course of the last 3 years? At least 4 or 5 separate occasions. 5. At least, I guess you could argue 6. I mean, that's why I said at least 5. Anyway, lots of occasions. So $70 is definitely something we're going to keep an eye on. I wonder why. I don't know. We'll have to see. We'll dig in there just a little bit, and there you go. Richard, Wild Bill, how you guys doing? Again, apologizing ahead of time. Internet's still not working properly. It is what it is. Just another day in paradise, or sunrise. All right, let's look at the detailed estimates page, see what all this means. Right now, we've got him as exact rank number 3. Hold Don't like the value, but like the growth and like the momentum here. We've got them in the textile industry, or apparel industry. I mean, retail, specialty. I don't know. They're going to report after the bell today. So we got the rest of the day today to decide if it's something we want to roll the dice on. Or, obviously, tomorrow's session in the morning, you can see if you want to fade it or do whatever, right? Obviously, a lot less risk trading after the earnings report. We all know that. Dr. Paul, how you doing, man? So they are in the top 11% of our Zacks industry rank. So that's good. Now let's look at these revenue numbers. Current quarter looks like 12.32% revenue growth. Next quarter, 10.48. Current year, 10.26. Next year, 10.57. So a little bit of a slowing, but then they're going to be right at that 10%. So that's good. Let's look at the EPS side of things. Current quarter, 10% EPS growth. Next quarter, 17%. Current year, 13.68. Next year, 11.63. So pretty much in line with the revenue growth. Hoping to get a little bit more, squeeze a little bit more out of that next quarter. The next quarter is going to include the holiday season, so it's probably why. So things are looking good. Things are looking good from an EPS standpoint, from a revenue standpoint. Over the course of the last month, you've only got one analyst with the chutzpah to increase their earnings estimate for the current quarter, current year, and next year. Same token, you have one analyst coming out and dropping those numbers just for next year, though. So we're safe in here, but next year, thinning it out a little bit. What's the overall impact to our Zacks consensus estimate? So this one must have been not much of anything because I haven't really moved for the current quarter, next quarter. Current year numbers got a little bit better, and next year numbers got a little bit better. So a couple pennies in the right direction, so that's good. The reports I was looking at this morning, there was a huge report out of Jeffries on myths of the age of Amazon. It was pretty darn good. If you guys can find it on Yahoo Finance or something, I can't send you out what Jeffries sends us because we pay for it. But if you could find the Jeffries report on retail, it's pretty good this morning, or it came out on Monday, I think. And they were dispelling some of the many myths of Amazon. And one thing that they said about Amazon here was that they're not really in the apparel business. If you take out the third-party vendors on there, they only account for like 2% of the apparel business. And when people are shopping on Amazon for apparel, they're getting socks, underwear, undershirts, stuff like that. They're not out there buying, button-downs and polos and things like that, right? So they're not too worried. And they specifically pointed out, I'm not sure if it was that report or another report, specifically pointed out some of the destination retailers. So Nike, Lulemon, places where, the reason why you go to the mall, right? The reason why you're going into the stores because they got cool stuff. And Lulu, they've got like running clubs and all sorts of craziness going on. Let's look at the surprises. So small surprises, not much. A little bit of a disappointment 3 quarters ago, but who cares about that? Okay. Let's look at the chart. It's talking about this $70 range. Let me see if I can zoom out a little bit further. Weeklies, of course. I like it. How much you want to bet this is a big fib? Just while we're here. Just while we're here, okay? Just want to show you something. Huh. I like to do these from time to time. Draw the big fib and just see if these happen to line up. This kind of got pushed under the 50. See how it kind of stalls about here? Interesting. Oh, look at that. So, I would argue we're still within this bigger fib structure. Make that argument all day. So look at that. Let's drop this a little bit. Let's go. See, the cool part about this free stock charts, I could draw this and then it stays on the other time frames when I go out. Here's what I wanted to talk about. Oh God, I love this. I love this volume and price. You got to see how it comes all the way out here and it shows you how important this level is. It's a key level for Lulu, and it's above that key level. But there's still a lot of mess in here. This is a war zone right here in this sort of 64 to 70 level. There's a lot of beef concentrated within that level. Now let's keep zooming in closer and you'll see. So basically here to the 70, and that's where all of it is. And that $70 level, save for, let's go. You know, in these 70s, here's just like a intraday pop and fade. It was here. Save for this nice rally that it had towards the end of 2016. Just an area where the stock has not been comfortable. Just hasn't been able to get up above that $70 level. So it's going to have a very compelling reason to push up above 70 in this market. So hands down, that's the level we're going to keep an eye on. Okay? That's a weird thing I just did. That would be cool if it was like an X. I'm just inventing my own symbols now. So yeah, Kurt, somebody did. I've got Broadcom in Surprise Trader. So I comment on it. Other than I have it in Surprise Trader, which is a long only service, so I can tell you that much. But I don't. I guess that's all I could say about it. I mean, I could say all sorts of things about it, but I just won't do an in-depth look on it because I have it in Surprise Trader, I guess. Just something I've been asked. So there you go. Yeah. All right. And it makes sense, Kurt. So 70s and this sort of 64 level. All right, what else do we want to look at? Got this 50-day moving average, but really Lulu hasn't done a great job of kind of bouncing along just that 50-day. I mean, it's got plenty of times where it chops above it. It just doesn't. There's not a lot of love there. You know, it's a loose cannon. There's so much volatility in this name. It's all over the place. So it doesn't really, like, the trend characteristic of it is just not there. It seems like this Lulu is much better served as a range-bound sort of stock. It has been. You can see all this chop. So when I'm looking at range-bound stocks, then I look for these. I like to check out my oscillators. So the commodity channel index. A lot of people will use the fast stochastics. You can use the RSI. Whatever floats your boat. I just happen to be a CCI guy. And what I'm for is oversold CCIs and overbought CCIs. And I wait for the extremes. The crossover in the middle, this is kind of why I don't care about it. Look how much you can get whipsawed on something like that. I'm much more interested in seeing the extremes. And we just don't have an extreme right now with the CCI at 57. Not a whole lot going on, okay? So I'm not too worried about what that's, setting up for me here. So there's that. Okay. Let's look at the G14 classified stuff on it here. These are revenues. So 10s, that's where we're going to kind of decelerate to. You can see that next quarter looking for 873. This is pretty blasé here. I mean, they just set this 10 number and just set it and forget it. If you look, almost every quarter is like that, just like a 10, a 10, a 10%, 10%, 10%. Nothing that creative here. Let's translate this over to the EPS side. And it looks awful familiar. This is interesting, though. This so far. Saying, yeah, 13, yeah, 11. No, 16% in 2020. Something awesome is supposed to happen in 2020. Some sort of re-acceleration of earnings. I don't know about that pie in the sky stuff. Let's worry about the here and the now. And the here and the now is 13%, which is still good. I think what the kicker is going to be here in this report is if you see gross margin expansion for Lululemon and those same store sales comp numbers, if those come in good, then you're gonna have a good day out of Lulu. If not, it's gonna be some. Let's look at this forward valuation here. And it's not terrible. I mean, you have, let's forget about the dark ages, right? And if you focus on what's been happening over the last several years, it's really Lulu just kind of sort of in this 20-ish range, right? Actually kind of on the low end historically for them, recent history. Haven't gotten up close to 50. And those are pretty big numbers there. We have 49.46 in 2011. But recently, over the last few years, I mean, even this year it traded between 26 times and 19.94 times. So in the 20s, it's very comfortable trading 20-ish multiple. So 22.83, basically 25. I mean, 24.83, basically 25. Sounds about right. Okay, so nothing out of the ordinary here in terms of the PE. And then price to sales, while we're at it, let's see what we got going on. So at 3.14, that basically puts it in line with the rest of the market. Let's see where it puts it in terms of its competitors, though. Because we know the S&P is a little over 3. We've been seeing that. Let's get the actual number here while we're talking about it. Oh, spot on! That's pretty good. Although, okay, here we go. Currently 3.71 for Lulu. This is like a forecast out. I don't know why this happens in this. But 3.71 for Lulu, 3.33. That valuation is getting richer too on the S&P. Let's look at the sub-industry. So this is the actual Zacks industry rank that we look at. Who else is in this biz? So they are a little bit richer than their competition here. 3.71 compared to 1.98. So there we go. So in line with the market, nothing that big. And when compared to where Lulu has been, it's kind of on the low end of things. All right, let's dig into this. Oh, wait, one more. Consolidated surprise, my friends. July, 7% move. Before that, you had a 12% move, a negative 20, a positive 20, negative 10, positive 6. All over the place. Now let's see if we can figure out why. So here's a beat on revenue and EPS and a victory. Okay, so obviously the market likes that. Same story here. Okay. Now, here's a miss and punishment. That wasn't even on the revenue side. That was just on the EPS side of things. Now, I don't have the previous chart up, but I can bet you that all that was growth expectations slowing, which caused a contraction in valuation. That's why it went down 20%. I bet you. Here's a small beat, and they were rewarded. Okay. So, what this tells me is, don't miss. Do not miss. It's another 2-cent miss, and they killed them. Okay? So, the market does not take kindly to a Lululemon miss. All right. Let's see what we got. So, they're reporting after the bell today, so we can look at this front week. Pull up the side-by-side view. Let's look at 66s, 66, 60. Look at all these wonderful. We got 50 cents here. All right, so 66, 76. We're just gonna call it 67 instead of 66, 76. I'm gonna call it 67. I got the Tiesto bumping for Dr. Paul here. It's been good luck, Dr. Paul. 345 by 370. Let's call it 357. At the money put, 345 by 370. Well, I guess we'll have to also call that 357. Let's see. They're looking for 10%, over a 10% move here out of Lululemon. It's a pretty big move. Looking for $7. Let's go to, let's just look at next week. See if they have the same expirations. They should. Of course they do. What do you guys want? You want just a shorter one? You guys just want a short, quick, to the point, or you want something with some drift? I know my delay is probably a little bit longer, but do we want some drift, or we want a quick? We want something quick. What's up, AA Ron? How you doing, man? What the heck? Let's look at this. Quick hitting stuff. Now, this is pretty interesting. I was talking about that $70 level and how that's provided lots of resistance. Yes, Trevor wants it quick. All right, no problem. What about this? What about a quick condor? How do you guys feel about this? Something I want to try out on you. Yeah, you guys like the quiff. Okay. Quick pops and drops. All right, cool. What about this? Remember what our chart was telling us, right? How about this? What if you sold the 70-71 call spread, 231 for the 70 call, 189 for the 71? That's 42 cents. I'm going to start typing this in here. So look at this. So short, this is the December 5th. This is December 8th. Okay. 70-71 call. 42 cents. And then what was that price level on the bottom? 64 basically. And then the 64.63. 64.63 puts. And these would be 231 minus 187 for 44 cents. That makes the Condor would be an 86-cent net credit. With 70 and 64 as the window, right? So, the way this works, if Lulu were to stay, let's pull this up. If Lulu manages to stay between 64 and 70 within this range at expiration, the net credit is the 86 cents. That's what you keep. All right? Now, here's the cool part. Let's say that Lulu rallies, okay? And it closes at $70,000, right? Anything past $71, it's going to be the max loss. Okay? The max loss in this case is $1, right? It's the most you could lose on either one of these because you'd have that total spread would be in the money and you'd have to cover it. But you got 86 cents was your net credit on it, right? So really you would only lose 14 cents on this deal of like actual money principal that you had, right? Now, before I get too happy here, okay? What I gave was just kind of the midpoint of this. Now, here's the problem. Maybe you can't get filled there. Let's talk about this specifically, this 64.63, right? So 220 to 241. It's a 21 cent spread there. So maybe you can't exactly get filled at 231, okay? And then on this is a wider spread too. This is 172 by 201. Just using the midpoint as an example in the hopes that, yeah, maybe you do get filled, something like that. But in real life, the actual application of it, you may not get that lucky, okay? But look, if your net credit total on this, let's say it's 75 cents, right? If it's 75 cents, it's still, you know, the most that you can lose is going to be $1, right? So you subtract the 75, that means you'll have 25 cents at risk. And you can't lose on both ends of this condor. So I think that gives you a nice little risk versus reward. Now, again, I don't know that these numbers, you know, how realistic any of these numbers are. If any of you, and you guys usually share with me where you get filled on stuff like this. I got to go back to having my live account up and doing it here while you guys are here so you can see it. We'll get back to that. We'll get back to that business in a little bit. But I think that this is good for a few reasons. And the biggest reason is just this. You're only getting 19 cents? Let me refresh this. Here we got the 70, 71. I like to see where some of you guys are getting. I mean, 19 cents is crazy. Trevor, that's got to be 19 cents is if you hit the bid, you know, and hit the ask almost. I mean, that's 16 cents there. So that's about the worst price you can get. So that's why we try and use this sort of midpoint. But even there, it's 42 on the midpoint. So that's what you should be trying to get. So I suppose it depends on your execution wherever you're at. Anyway, I think that's a decent... That's my trade that pays here because I've seen a lot of these retail names not doing much following their report. So some guys can get 66 cents. So even at 66 cents, right? 66 is the most that you can make on that trade. The most that you can lose is only going to be the 34 cents on a trade on something like that. So there you go. So 66 is probably as little as you'd want to get here. Anywhere from, you know, the important part is you're really hoping that Lulu stays in a tight range. And if you don't think Lulu's going to stay in the tight range, then I wouldn't do it. So there you go. So that's what I think. I think that there's just a big force here at 64 and a real big force at 70. And I've seen a lot. So this morning, American Eagle Outfitters reported. And the stocks moved 1%. So it's just kind of blah. Zoomies, I actually got in trouble with this first day move to the downside. Maybe I got sucker punched out of that. Who knows? But they're just kind of creeping up a little bit. I guess there's 2% today, so it's an okay day today, but still within the range. So some of these retailers just kind of plodding along. There's not these huge jumps. A little bit of whipsaw action. And think about how many of these reports, they've been looking for 10% out of Lulu. And it gives it to them. Eventually that streak ends, right? So they have gapped before. And they chop around a little bit, but this is also rallied up here. 50 days down here. I just get the feeling that I just don't think it's going to move much. And look, this makes... Let's show the all. See if there's any lotto action on this. Given that 70 is that sort of firm top where the stock has been. Look how expensive. I mean, you got to pay $50 for a 77. I mean, that's 20% out of the money. No thanks. Look at the implied volatility on these options. 258% over here. Now that's because this is, 2 days after earnings, but even if you go out to the week after, still pretty good numbers. Which I just don't think it's going to move as much as the market thinks right now, or as the options market is pricing in. Let's put it that way. So I think you can make a quick little hit on this. Okay. And there you go. So that's my trade that pays. I think the trade that pays. Trade that pays is the Iron Condor. All right. Again, I apologize for the buffering and the issues that we've been having. I've seen a few times when my stream has gone down here on the upload. I'm hoping that this gets resolved sometime this week. Good news is Comcast is not charging me for this period where they're not delivering the service that I'm paying for. So that's a plus, definite plus. I do appreciate them doing that, but I would really just rather I had my upload stream golden so that I could talk to you people on a normal basis. So that's kind of where I'm at. I don't know if I'm going to do anything tomorrow because of this choppiness. If you guys could give me some feedback as to how bad it was today, that'd be great. I saw a couple times where you guys said it was buffering. But if it's just that, then I'll probably try and find something else to do tomorrow. Or obviously I'll do the GBU. I need to do a GBU. Just been getting caught up in some other stuff. And we'll go from there. All right? So thank you guys so much for hanging out with me here on Zach's Live Trader today. I will be in the chat room later. And we will go from there. All right. And Mr. Wallace, I have an embargo on Avago on Broadcom. I can't talk about it here because I have it in Surprise Trader. Okay. All right. Good. Wasn't bad. Okay. Good. All right, guys and gals. So thank you so much for hanging out with me here today, and I will see you in the chat. And maybe I'll put on a show tomorrow or definitely on Friday. All right, guys. Thanks.